Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, July 11th. Today is the CPI day for June, and this information gave us a lot of insight in what the market is expecting. It gave us a lot of information about how the money is rotating. We are seeing billions of outflows from Magnificent Seven tech stocks and going into the small caps, the Russell 2000, and all those small businesses that really need lower interest rates environment to be successful. Because today's CPI shows you that the progress to the downside is continuing. And that is most probably going to cause the Fed to basically lower interest rates as soon as September and maybe another time in December. And this environment in which lower interest rates are pushing lower the Russell 2000 small caps, those are going to be gaining debt, gaining a lot of loans for their businesses at lower interest rates, and perhaps they are going to be successful. So this is how the market is rotating and how you really today had to manage your risk and not buy every dip. Because today, if you bought every single dip, you were basically destroyed. Let's review the CPI data because the previous one and the actual one was really similar, but the consensus was what is causing this market sentiment. In terms of inflation headline, we were expecting 3.1 on the year over year, and we go lower. We got lower, 3%, and month over month, we got a minus 0.1. We were expecting 0.1 in the positive. The same happened for the core inflation, 0.1 below expectations and 3.3 below expectations. Basically, every single read was below expectations. And this is really putting the sentiment of now we are going to see lower interest rates. And in terms of what was causing this, basically is energy. Energy was every single data was in the negative. However, we still have services in the positive, shelter 0.2, and transportation services are minus 0.5, but look at these readings on the unadjusted 12 month. This is insane, but still, CPI was showing progress to the downside. So how the market behaved, it's really something that was expected. Today, I will try to explain why in an environment of lower interest rates and in an environment in which we are going to uninvert in the yields, the tech stocks are going to suffer. And this is hitting when the earnings are starting tomorrow in the banks. Lower interest rates, lower income for banks. So basically, this is a play in which the tech stocks, all the Magnificent Seven, look at this. We have minus 2%, minus 2%, minus 6, minus 2, minus 2, minus 5, minus 4. They are being destroyed. The Nasdaq is minus 2% in the red today. And we have to really go back to April to see a day like today, minus 2%. Before moving into what was causing and the things that we need to check in other markets, this was yesterday's setup. I was watching this bounce, but once I saw the data and once I saw this big push, this is a 15-minute chart. If we see the 1-minute chart, we could already see that the big push to the downside, 50% retracement, we couldn't even hold this, and then we started going lower. This is already a signal of be really careful with the longs. This was a big manipulation move. And basically, if we take that as the sentiment, we started to see, selling and selling and selling and selling and more selling and more selling and more selling. and we went through all my levels except one. Down here, this was the July 5th NFP non-farm payrolls candle. You can see down here, I have it down here marked. I have the entire candle here. This is the range of the candle, NFP candle of July 5th. And I think this is a good structure. If you didn't find an opportunity and you didn't destroy your account, perhaps down here, it's going to be a good long or maybe some kind of retracement. I have a fifth retracement here. Let me just extend that until maybe this liquidity. I have several targets. I'm not long yet. I was trying to buy the dip and I got stopped out for 30 points. I'm down 600 today because I was looking for this pullback, buying the first candle, big rejection, and got stopped out down here. Then it continued lower. And let me tell you, this kind of structure is pretty bullish. I have here the inverse fair value gap. If we start seeing this, then most probably we are going to get this liquidity up here and perhaps some kind of long around, let me tell you, like this would make sense. That would be at 1.8 is not a lot. We have another targets up here. I mean, we have a lot of potential to the upside, but the fifth retracement, the most that I'm willing to target is this level. The 50% retracement for all these shorts that are going to cover 20,650. I wouldn't risk it for the golden pocket because today it's a big red day. So now that we covered the Nasdaq and we know that the Magnificent Seven is really suffering, some things that are correlated with that. We have a lot of strength in financials. Bank of America is in the red, same as JP Morgan, but we have Wells Fargo that is reporting earnings tomorrow, 1% in the green. We have KRE, regional banks, 3%, Charles Schwab's 2%, a lot of smaller banks. Look at these, 6, 3, 5, 4. This is pushing the ES a little bit higher. The ES is only minus 0.80 in the red. The Nasdaq is 2%. Why? Because the small caps are ripping 3.60% today for the Russell 2000. I told you, look at this push. Look at this push. We just skyrocketed to 210. We are leaving behind a lot of imbalances here, a huge gap that I'm going to right now let me just show you. I'm going to track this because I think this is pretty important. The volume today and the spike to the upside shows you that big money is going into this market, into the small caps. And more than that, look at this overall breadth from the low of the range to the high of the range. And we are pushing pretty hard. The momentum building. Now we have an uptick on the trend and an uptick on the long term. I think today and tomorrow are going to be pretty important for investors. If we see tomorrow another follow-up day on the green for the equal weighted ETF RSP and for small caps Russell 2000, we are clearly seeing a big rotation out of tech into small caps. Dollar is really struggling because CPI is showing progress to the downside and lower interest rates are going to be pretty bad for the dollar. Yields are being destroyed. Look at this correlation to the downside. The 2-year, the 10-year, and the inverted yield curve that I told you earlier, we are really pushing into the uninversion. And this is scary as hell. Because once we uninvert up here at 2%, then the recession will be called, and most probably growth, GDP, and a lot of things on the market will be broken. The economy will suffer, and we will see what happens. But right now, we are obviously seeing that smart money is going out of tech due to the scary environment of lower interest rates and earnings for these stocks, and going into those small caps that are going to be benefited by the lower interest rate environment. This is what's happening. We are seeing that on the NQ. Look at this bearish engulfing candle. We are really leaving behind this volume here. Let me just put a line. Volume here, 20,600. The 1 hour is 3 hours of straight down selling. So I don't know what else to tell you. I'm seeing some structure down here. Don't be the first one of going long. There's a lot of potential. We can obviously go in lower, but if you want to risk it, please manage your risk, because today it's really, really dangerous. This inverted fair value gap is pretty important. And this first liquidity needs to hold. Then we might see some kind of choppiness until 20,660 for this inverse and this liquidity being taken. More than that, I don't think it's worth the risk today. And it's not only today. This is investors rotating the money into other parts of the market. This is not just today. This could be the beginning of a pretty big pullback on the tech sector. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time. As always, remember that the trading day is not over yet. We might see a little bit of a bounce, dead cat bounce, but manage your risk, please. We could see even lower price, maybe 20,371 down here are a big daily pivot area. So as always, be patient, be disciplined, manage your risk, and live to trade another day. Stay safe, everyone, and see you tomorrow.